Welcome back to BitcoinDorks. Today, we're delving into the recent turbulence surrounding the ARKM token. Amid market skepticism and controversy, the ARKM token has tumbled by a staggering 20%. So, let's dive deep into the reasons behind this dramatic downturn and what it means for investors and the crypto community at large. ARKM's ARKM token has been making headlines recently, but unfortunately for the wrong reasons. The token, which was once seen as a promising investment opportunity, has experienced a significant drop in value, leaving investors reeling and searching for answers. So, what exactly led to this sudden downturn? First and foremost, market skepticism has played a significant role in driving down the value of the ARKM token. In recent weeks, concerns have been mounting about the project's viability and long-term prospects. Questions have been raised about the team behind ARKM, their development progress, and the overall utility of the ARKM token. Controversies surrounding the project have only added fuel to the fire. Rumors of internal discord within the ARKM team and allegations of mismanagement have eroded investor confidence and contributed to the negative sentiment surrounding the project. These controversies have cast a shadow over ARKM's reputation and raised doubts about its ability to deliver on its promises. External factors have also played a significant role in the ARKM token's decline. The broader cryptocurrency market has been experiencing heightened volatility in recent weeks, driven by a confluence of factors that have created a perfect storm of uncertainty. Regulatory uncertainty, in particular, has been a major driver of market sentiment. With governments around the world considering or implementing new regulations that could impact the cryptocurrency industry. This uncertainty has led to increased caution among investors, as they wait to see how these regulatory developments will unfold and what implications they may have for the future of cryptocurrencies like ARKM. Macroeconomic trends have also played a part in the ARKM token's decline. Economic indicators such as inflation, interest rates, and unemployment rates can all influence investor sentiment and market dynamics. In recent months, concerns about inflation and rising interest rates have weighed on investor confidence, leading to increased volatility in financial markets, including the cryptocurrency market. These macroeconomic factors have created headwinds for ARKM and other cryptocurrencies, as investors seek safe haven assets amid economic uncertainty. Geopolitical tensions have contributed to the turmoil in the cryptocurrency market. Heightened geopolitical tensions, including trade disputes, political unrest, and military conflicts, have the potential to create significant uncertainty and instability in financial markets globally. When geopolitical tensions escalate, investors often seek refuge in assets perceived as less risky, such as traditional safe haven assets like gold, bonds, or stable fiat currencies. This flight to safety can have a direct impact on the demand for cryptocurrencies like ARKM, as investors reassess their portfolios and adjust their risk exposure in response to geopolitical developments. In times of geopolitical uncertainty, investors may opt to reduce their exposure to riskier assets, including cryptocurrencies, and allocate their funds to assets perceived as more stable or resilient to geopolitical shocks. Moreover, geopolitical tensions can also influence market sentiment and investor psychology, leading to increased volatility and speculative trading activity in the cryptocurrency market. Uncertainty about the geopolitical landscape can create a sense of fear and anxiety among investors, prompting them to make impulsive or reactionary investment decisions that contribute to market fluctuations. Geopolitical events can have far-reaching implications for the global economy, extending well beyond immediate tensions to impact critical factors such as trade flows, supply chains, and economic growth prospects. When geopolitical tensions escalate, they can disrupt established trade relationships, hinder the smooth functioning of supply chains, and inject uncertainty into future economic conditions. Furthermore, these disruptions reverberate throughout the global economy, as businesses and consumers alike grapple with heightened uncertainty and risk. In response to this uncertainty, businesses may delay investment decisions, scale back expansion plans, or adopt a more conservative approach to managing their operations. Similarly, consumers may tighten their belts, reducing discretionary spending and saving more as a precautionary measure. This erosion of confidence and hesitancy to invest can have a dampening effect on economic activity, slowing down investment and consumption and potentially stalling economic growth. As businesses become more cautious about making long-term commitments and consumers curtail their spending, overall demand in the economy may weaken, leading to a slowdown in production and job creation. Disruptions to trade flows and supply chains can exacerbate these economic challenges, as businesses struggle to source essential inputs and fulfill customer orders in a timely manner. This can lead to production delays, inventory shortages, and increased costs, further weighing on economic growth and exacerbating inflationary pressures. These macroeconomic dynamics can have a ripple effect throughout financial markets, influencing investor sentiment and market trends, including the demand for cryptocurrencies like ARKM. In times of heightened geopolitical uncertainty, investors may seek alternative assets that are perceived as safe havens or stores of value, such as gold or government bonds. This flight to safety can divert investment away from riskier assets like cryptocurrencies, leading to a decrease in demand and downward pressure on prices. Conversely, geopolitical events that are perceived as positive or stabilizing can have the opposite effect, boosting investor confidence and driving demand for risk assets, including cryptocurrencies. For example, geopolitical developments that signal improved trade relations or geopolitical stability in key regions can lead to increased investor optimism and a resurgence in risk appetite, fueling demand for cryptocurrencies and other speculative assets. In conclusion, the recent crash of the ARKM token underscores the volatile nature of the cryptocurrency market and the importance of due diligence and risk management. While the current situation may be challenging for investors, it also presents an opportunity for reflection and learning. That's all for today's latest updates and insights.